Greetings. Good afternoon, Juneteenth family. Welcome to another weekly Lunch and Learn.
In terms of business, if you have a dream, go for it. Pursue it. Work hard at it, because with anything that you want to do, it's gonna come hard work. You know, if you don't put the hard work, if you don't put the time into it, it's not gonna flourish the way you want to.
Maybe advice for anybody who's looking to start a business, like just do it. Start off small and then kind of expand. I know sometimes it can be overwhelming, but like once you're in it, you'll be like, oh my gosh, why didn't I do this long time ago?
Love you. Tell yourself, I love me too. I love you, Omena. Love you. When you open your heart and your mind, you're opening up to your blessing.
Yeah.
Greetings, and good afternoon, Lunch and Learn community. Welcome to another weekly edition of our Lunch and Learn series. Today we have a return guest. Super excited about this. Mr. L.S. Johnson is the owner of Piggy Bank Stacks, and he is back here in the house with us today. Today he's here to talk about the stigmas that are behind the stock market and why our folks don't like to invest and why we're scared to invest. He's here to debunk, demyth any beliefs that you may have and get them out of the way so that you can dive in and start making some money for yourself. There we go with that spam in the YouTube world again. We're going to get that out of here. And let's bring LS up to the stage.
Good afternoon.
Hey,
How you doing today?
I'm good. Welcome back. Look how excited we are here to be here. We're over here talking over each other and talking at the same daggone time. At the same damn time. So, good morning. Good afternoon. Like you said earlier, I'm still in the morning. I'm a night owl, and my day starts about now every week. And like you reminded me a little while ago that we're in the afternoon. So, good afternoon, LS, and welcome.
Good afternoon. I'm a night owl too, so I just been up early lately. But usually my day starts about now, maybe a little bit later. So
that's what's up. So
we're
just to
gonna
remind the community, just if they kind of forgot who you may be, you were here with those dope jackets, with your different pieces of clothing, but you were also here talking about money and different things. So you are a entrepreneur who is passionate about finances and having your folks know about money. So what are you here to teach us today, LS?
Today we're gonna just talk about the stigmas or fears, pretty much, about investing in the market. I feel like a lot of people in our community, they have these myths about investing in the market and losing money. I had a conversation recently with my mom, and I was talking to her about stocks and showing her how to read a stock chart. And one of her biggest questions is, what if the stock market crash? Like, and I lose my money? And that's a big stigma, when you hear that terminology, stock market crash. And it's actually not as bad as people think. You don't exactly lose your money. Yeah, you might be in the negative depending on what you're investing in, but even during like a stock market crash, there are stocks that still prevail, even though the stock market is declining, and that terminology basically goes in terms of the indexes. So your S&P 500, your Dow, your NASDAQ, when those drop to double digit percentages and they're in the red, most of the times, they'll say, "Oh, we're in a stock market crash." As the economy right now, we're in inflation, things like that. The Fed is constantly raising the interest rates. It causes turmoil in the market.
Understood. All right. Well, with that being said, that's all on you for you to teach us. I'm like, I know a little something about what you're talking about, but I'm definitely a fan of getting rid of stories and anything that our folks are holding on to that are blocking us and getting in our ways. So I am honored to hand the stage off to you and welcome you to present. Thank you for being here.
Thank you. I appreciate you guys again for the opportunity, Juneteenth NYC. and emoji events. Thank you, and thank you, Jamie, for having me once again, talking with me, sitting down. So today we're going to talk about stigmas behind investing in the market. Myself, I'm LS Johnson, as Jamie said. I am the founder and CEO of Piggy Bank Stacks. So just a brief agenda. We're gonna touch on just the history of investing, starting with Black Wall Street. Then we're gonna go into why is investing a fear in our community, followed by why you should invest, and then investment tips, uh, some resources that I researched and that you guys can use, to get your investment portfolios and get your investment lifestyle started. And then, of course, ways you can reach me and things like that. So, to start off, me, my business was started back in 2013, and it's just to empower uh, the community, based on financial, aspects. So, I look to promote my brand, with starting with saving money, or stacking, as we call it, on a large scale, then going into money management, investing, entrepreneurship, good credit skills, things of that nature. And our mission is to give our customers a stylish merchandise that promotes our message and creates programs, workshops, fundraisers, and etc. that will empower them as well as their communities up financially. And our hashtag is stacking is key. Moving forward now. So just the history of Black Wall Street, during the 20th century, with the former neighborhood of Greenwood, Tulsa, Oklahoma. This was where most of our Black Americans thrived. You know, they worked mainly as servants in Tulsa. Then they developed their own society, where they started their own businesses. They opened up grocery stores, barbershops, and the professionals like doctors, real estate agents, they opened up their own offices. You also had their own newspaper and their own schools. The massacre in 1921 caused Black Wall Street to fall, and the people in that community had to rebuild, but it never was the same after that. By the end of the 1950s, more than half of the businesses had closed. Yeah. And then, a little, you can see in the slide, this kind of changed the attitude towards investing in our community, I feel, after Black Wall Street. All right, so I'm going to play a quick clip of this video by Dr. Boyce Watkins, where he talks about why Black people have fear in investing in the market.
Thousands of years. And so a lot of what you see in the Black community now is that, as a result of what you've seen with oppression, you have a lot of fear. Oppression can lead to all forms of trauma, from abuse to addiction to other things like that. We experience that during childhood. What that does is that makes you see risk very differently. A child who grows up in a safe, healthy, protected environment, he sees risk as, ooh, if this goes well, look at how much money I can make. A child who grows up in a traumatic environment where he's been abused or neglected or abandoned, he's going to see the same risk and say, ooh, if this goes wrong, look at all the bad things that can happen. So as a result, what you have is, in the Black community, you have fewer people who start their own businesses. I mean, we are far disproportionately low in terms of percentage of us who actually go out and start our own businesses. Most of us really believe that we're supposed to work hard and go to school so that we can learn how to go work for a white man. That's what we're trained to do from birth. The other thing that you see is you don't see Black people investing as much in the stock market, because anything that involves some probability that they might lose their money can be very scary for people, especially if they don't understand it. The other thing too is that many African Americans who are doing well A lot of them are first generation in terms of wealth. Many of us still don't understand the idea of what it means to actually build wealth in the first place. And then a lot of us are investing our money taking care of loved ones who are struggling, who aren't doing as well as us. So by the time you get around to thinking about investing in the stock market, that's a little more difficult to do. So what I would say to people that are afraid of the stock market is this. Number one, go to your bank and just say, I want to invest in mutual funds. And ask them to explain to you the different types of mutual funds you can invest in. Don't try to pick the right stock. Don't feel like you have to be an expert in the stock market. Mutual funds will diversify your money, put it in hundreds of stocks so that it's not a matter. So when one stock goes up, the other one goes down, it all balances.
Okay, so I like what he said, because that triggered, our psyche in regards to, you know, having fear and just wanting to invest. A lot of us, we don't like to lose money, especially coming from low income families, single family homes. When we're not used to anything. We like to hold on to our money tight, especially our older generations. Millennials and Gen X's, they more so are into the investing in stocks, investing in crypto. But our older generations, they like to hold tight. The most they know is saving. After that, they're not trying to put their money into a company, and if that company is not doing good, they lose money. Like, losing money and black people don't mix. So moving on. Sorry about that. So why does our community fear investing? One, we're unsure where to start. And a lot of times you could start out with just finding an investment bank. You have Charles Schwab, you have Alley Bank, which I use. You have TD Ameritrade. You can go to your local bank and ask them, do they have an investment account that you can start a self trading investing, or you can have someone do it for you. You can have an investment banker, and they will invest for you based on your risk tolerance. So they will allocate your money where they feel your risk tolerance is. That's a good way to start. The myths about needing a large sum of money to invest, you don't. A lot of stocks start at anywhere from $50 a share. They have stocks even as low as $10 a share, $5 a share. If you do your research, you can just type in Google, oh, what stocks are $50 or less, things of that nature. The perception of having too much debt to prioritize investing. Now, you should be careful about investing if you do have a large amount of debt, because with investing, most people who invest will tell you, you know, there's going to be ups and downs. There are ups and downs in the stock market. So the money you invest, let that be money that you don't care about losing if you do take a slight loss or if you are in the negative in your portfolio. But you know, just because you have that, it shouldn't deter you from wanting to invest, because investing, as we will talk about in a few, can help you with your overall income. Uh, Past negative experiences, maybe you invested in something else. Maybe someone was starting a business and you fronted them some money, or maybe you were into say susus or whatever, where people pool their money, and then maybe you had a situation where someone didn't uphold their end of the bargain and you didn't get your money. uh Fear of a stock market crash, which is a big stigma in investing. We're going to touch on that. And then comparing investing to gambling. The difference with gambling as opposed to investing in the market, when you gamble your money, if you go, you play roulette or you play a slot machine, you put your money in, say you put $10 in, maybe after the first couple of minutes you lose that $10, or if you bet $10 on red and it hit black, you lose that $10. As opposed to with the stock market now, when you put $10 into a stock. Say you buy one share of, say, Apple, and it's $10, right? If Apple falls to 9.75, you're only 25%, 25 cents in the negative. Now tomorrow or the following day it could go up to 10.50 or $11. Now you're in a positive. Now you gained $1 or so on or however. So stock ownership by subgroup, right? So this is a chart that I got from Gallup. So it basically talks about, the people in the US who invest based on household income and then race and ethnicity. So do you personally or jointly with a spouse have any money invested in the stock market right now? Either in individual stock, a stock mutual fund, or in self-directed 401k and IRA, which is 457. Those are your retirement accounts. Usually, you can do it through your employer or you can even do it on your own. Those are savings accounts that set you up for retirement, but they do allocate your funds into the market. Okay, so for US adults, about 58% yes, 41% no, and that's out of 1,018 people. Household incomes, now, as we see 100,000 or more, you have a higher percentage, 89%, as opposed to 11% saying no, and that's out of 285 people. 40,000 to 99999, you got 61%, as opposed to 38% out of 423 people. And then with less than 40,000, it gets lower. It only got 25% who do, 75% who don't. And then for race, our white Americans, they have 64% of them invest out of 35 who don't. And people of color is 46% out of 52. So less of us invest and more don't. All right, so let's talk about the stock market crash, right? Or stock market crashing, that terminology. Stock market crash is an abrupt drop in stock prices, which may trigger a prolonged bear market. Oh, I'm sorry about that, guys. Or signal economic trouble ahead. Market crashes can be made worse by fear and herd behavior among panicking investors to sell their stocks. So, real quick, that's usually what causes the stock market crash because individuals and companies that invest in stocks, once they start seeing their investments dwindling or taking a big decline, they normally pull their money out. And the stock market also fluctuates based on the biggest CEOs, companies who invest in the major companies like your Apple, your Microsoft, your Samsung, Amazon, etc. So when those people start pulling out, it causes declines. And even individuals, everyday people who invest in the market, usually once they start seeing the decline, they want to take their money out. Nobody likes to lose money. And a bear market is pretty much just when you look at a stock chart, it's a consistent decline in an individual stock or an index um, for a consistent amount of time. Several measures have been put in place to prevent stock market crashes, including circuit breakers and trading curves to lessen the effect of a sudden crash. And that's usually because during this time it's like a frenzy. Smart investors, they're going to keep wanting to buy stocks that have lowered because they look at when a stock falls, okay, now it's on sale. It's just like, you go out, a Louis bag you want is 1,500, it dropped down to 700, you going to get that. You run into the Louis store to get that. So good investors look at that the same way. They see big companies for the low, they want to buy. And people who are in fear, they want to sell. And that could kind of cause frenzy in the market. And this chart just talks about, the different timelines of stock market crashes from 1929 all the way to 2020. Now, in 2020, I started investing. I'm a self taught investor. I did it during the pandemic when I was home. Everybody was home doing things. Everybody had their things they was doing. Some people, you know, applying for PPP loans. Some people were just home, binge watching shows. I was at home learning, like learning something new, and I took a found love for the stock market and investing. It was something I always wanted to do, and in 2020, I just really just buckled down and learned it. And that's where I just took a leap and said, you know what, I'm going to invest my money. I'm going to start with a couple of $1,000, and just I invested in stocks, mutual funds, ETFs, and I did the next year. I did pretty good because a lot of the stocks and companies were falling during the pandemic. It was a very uncertain time. You know, we didn't know how we was going to get out this new thing that we knew nothing about. Everybody's getting sick, and sure enough, companies started rising that following year in 2021, and I made a nice amount of money. You know, nothing too crazy, but I made some good coins off the pandemic. All right, so stock market recovery. This is just a chart that shows you different time frames in which uh, there was stock market crashes and then the recovery point, because there's always light at the end of the tunnel. So, this is based off the S&P 500, which is one of the indexes that uh, the stock market looks at in regards to large companies and their fluctuation in the market day by day. So as you can see, 2007 to 2009, the blue is bear market in terms of months. So that was the months that it was at a decline. It was 17 months during 2007 to 2009, but then there was 49 months where it was a recovery. So that means things were up. Companies was back in the green. 2000, 2002, 31 months compared to 56. 1973, 74, 21 months compared to 69 months. The only year which there was more of a decline as opposed to the recovery was actually my era, the 80s, 1980 to 82. I think that's the Reagan era. Wasn't a good year. All right, so why should you invest? It helps to build wealth. A lot of people who are day traders, long term investors, really have acquired not only wealth, but generational wealth for their families because they invested their money in the market. Just a quick example, Amazon, I want to say about a year ago, 18 months ago, was trading at over $3,000 a share. They did a stock split where they split their shares and reduced the price, and it's now trading at somewhere around $100 or maybe less now with what's going on with inflation. But anyone that invested in Amazon in the beginning when they just started as a publicly traded company, they would have made some good money with Amazon rising to $3,000 a share years later. So that's one way that investing in the market you build wealth, generate retirement income or devise an early retirement plan. That's what your 401ks, your 457s. Your employer, they will put a percentage in that you want based on what you decide, and that will build on through your time of working in employment, and then you'll have a nice nest egg when you retire. Invest to meet other financial goals. Sometimes you might want to invest to make extra income, to help pay bills and stuff like that. You know, um, you know, but you take that risk of investing. Once you make money, you gain a profit. You can use it for other things, or even investing in other things, maybe real estate or investing in a business, so on and so forth, that receive return on investments. That's of course making your profits, whether you sell your stock when it's at a high or you receive dividends, and we'll talk about that. And then just to maximize your yearly income from your investments. Okay, so what are stocks? and bonds, right? So we're gonna talk about stocks. So when you have a stock, you own part of the company. You know, if you have shares of stocks, you hold equity securities, meaning you are a part owner of that company. Mutual funds and exchange traded funds, which are ETFs, are additional ways to invest in securities. Single mutual funds or ETFs might contain dozens or even thousands of stocks, bonds, and other securities. There are two main ways to make money with stocks. Dividends are usually when you invest in a company, they will pay you for being a shareholder. So they will pretty much, because you put your money out and believed in them and invested in them, they give you something back. And a lot of times it's more than putting your money in a savings account where you don't grow any money, or even putting it into a high yield savings account where the percentage might only be 1.5% or 2%. A lot of these companies are paying people 4%, 5%, 9, 10%, even 15% for investing in their company. And that's money that you're getting based on the stock price and on a yearly basis, and you might get paid out monthly, uh, annually, or quarterly, which is, every uh, 3 months. All right. So with dividends, when companies are profitable, they can choose to distribute some of those earnings to shareholders by paying a dividend, or either take the dividends in cash, or you can reinvest them back into the company. All right. Then there's capital gains. Stocks are bought and sold consistently throughout each trading day, and their prices change all the time. When the price of a stock increases enough to recoup any trading fees, you can sell your shares at a profit. These profits are known as capital gains. So pretty much people trade stocks throughout the day. That's why the stock market fluctuates up and down every day, every week, even every hour. But when your stock reaches beyond the point where, of course, if you had to pay like a commission fee or anything like that, or you get past your average price, which is the price that you paid for that stock, maybe your stock might go up $2 from you paid 5 for it. It might go up the next day to $7. You made a $2 profit. That's considered your capital gain. Bonds are a little bit of a more safer investment. Bonds and bond funds can help diversify your portfolio. Bond prices fluctuate, although they tend to be less volatile than stocks. And bond prices mainly fluctuate uh, in regards to inflation. So when inflation is high, bonds usually are more, honestly. Like treasury bonds are more. And when inflation is low, bonds might be less. But they also pay, sometimes a higher percentage, and they don't move as much. So, you don't have to worry too much about, losing money or losing a large sum of money. Bond, some bonds, particularly in the U.S. Treasury security, come with relatively low risk and can help preserve capital and potentially generate an income. When interest rates rise, bond prices tend to fall, and vice versa. You know, and it could depend. It depends on the bond, because I know with U.S. Treasury it's the other way around. Generally, a bond that matures in 1 to 3 years is referred to as a short-term bond. Medium or intermediate-term bonds are generally those that mature in 4 to 10 years, and long-term bonds are greater than 10 years. Mutual funds and ETFs. Mutual funds pool the money of many investors to purchase a range of securities, which are stocks, to meet specific objectives such as growth, income, or both. Mutual funds can offer cost effective diversification. Each mutual fund has a different investment objective. Some funds invest in a particular product, such as stocks or bonds. Some focus on a particular industry or region. Others seek to replicate a market index. Example, the S&P 500. Most mutual funds do pay dividends, and all mutual funds have fees and expenses. So you'll pay like a commission fee, and then if you do sell them, maybe before a year's period that you bought it, you might have to pay some type of expense on the back end. But mutual funds are good because They don't really fluctuate in price in the market. They're almost like a savings account, well, high yield savings account, but the only difference is that they pay more of a percentage in dividends for you investing in them, and they pool, like they said, they pool in money, so your money is diversified into different uh, asset classes. So maybe consumer goods, fuel, petroleum, commodities, which is like, your fruits, your veggies, things like that. Retail, consumer goods, your grocery store companies, things of that matter. Your toiletry companies, things like that. And ETFs are kind of similar, but they're just a little bit different because they are traded day to day, so their prices fluctuate a little more. So ETFs, like mutual funds, are pooled investment products that offer investors the opportunity to purchase shares of a fund that holds the assets it tracks. An ETF enters into contracts with financial institutions, typically large brokers, to act as an authorized participant. ETFs also might pay interest or dividends, which may either reinvest or pay periodically to shareholders, depending on the way the ETF is structured. Yeah, so not all will pay dividends. The ones that do, it's just like a mutual fund. It could be monthly, it could be yearly, it could be quarterly. These, like I said, though, are more traded in the market. So the price does change a lot more. And they usually stick to one asset class. So if you have an ETF, they might stick to just fuel companies. So like BP, Exxon, Chevron. Uh, if you have one that's in retail, they might stick to Macy's, uh, Bloomingdale's, Walmart, Target, things of that nature. Okay, this is just a example of the three major indexes. So your Dow Jones, your Nasdaq, your S&P, and this was the performance as of today, a little bit earlier, about 10:40 today. So they all actually, the market is actually up today because everything you see is in the green, even though a lot of people, if you don't know about the market, you may not be able to understand this, but when you see green, it's good. And it's up. Like the Nasdaq was up 5%, a little over 5%, $565. It was up today. So the market so far is looking good. All right. So my resources, FINRA, That's where you can get your investment education and information. This is a good website if you just want to learn about investing before you jump in. It breaks down stocks, mutual funds, bonds, ETFs, everything you want to get is right there. It's like an encyclopedia for investing. Ally.com is actually a savings and investment bank, but they teach you classes on how to get started. They're very informative, very helpful. You can start anywhere from a high yield savings to a CD to an investment account, whether it's self directed, you'll do it yourself, you buy your own stocks, mutual funds, etc. Or you can have robo investor, which they'll pretty much navigate investing your money for you. And then anytime you want to research a stock, you can go right to finance.yahoo.com, which is, Yahoo Finance. You can look up any stock that you want to. You can see the price. You can see whether it pays dividends. You can see the uh, highest point it made in a year, the lowest point. It breaks down every stock with its financial information. All right, and you can find us, of course, Piggy Bank Stacks INC on Instagram, Twitter, Facebook. Check our website out, piggybankstacks.com. Get your merch, check out for new drops. And, thank you. Thank you for having me. I hope you guys reach out. If you ever want to ask me any questions about trading, getting into it, I'm here. I love this topic, so I'm here to definitely help my people. That's a part of what we're here for.
over here on mute, talking away. So first of all, that was full, so full, such a full presentation. I know for myself, I definitely have to rewind, have my notebook, stop and pause, get a lot of that down. It was a lot of information, but that is like so perfect, especially for us folks that don't know a lot about the stock market and may
Mhm.
have a lot of questions. So thank you so much for that full presentation. We
Thank
do
you.
have a
Thank you.
question in the chat. So someone asked, were your statistics, I believe the stats, were they focused on the US market, or is it also, and I guess all of the information you gave, or is it also applicable for stocks from different countries?
No, so this was basically on the U.S. market. But they do have the China market, the UK, which you can find it. You can find out even just googling it. I don't know the names offhand, um, but the markets itself kind of emulate each other. But there are companies in China that we don't have. There are
Yeah.
companies in the UK that we don't have. So and then it also goes with like your what am I trying to say?
Would it
Put
be maybe,
my brain apart.
because
Um,
what came up for me is that possibly also that the regulations may be different, so they may want to
yeah,
up
yeah,
it.
the regulations. Oh, the currency changes, and that's what I was thinking about. So of course, with the currency changes, the dollar, the yen in China, and then the pound in the UK, those things also play a part in the market.
Okay, beautiful. Well, I didn't see any more questions in the chat. Oh, okay, wait, we do have a question. So Keisha was asking, she said she heard about reading charts as a way of choosing which company to buy stocks from. Is there any specific chart reading technique that you use or prefer?
I think if you're a beginner, the easiest way to read a stock chart is, of course, reading candlesticks. So it'll show like when a stock is on a increase or an incline, and also on a decline. Um, the green bars, of course, is of course when the stock is in the green. When it's in the red, it's a decline. And then you can do a lot with stock charts. You can actually um, set what they call a support and a resistance point. So your resistance point is when the stock reaches its highest point, whether it's for the day or it could be for the month. And you can navigate the chart by hour, by day, by weeks, by years. And normally when you see a consistent pattern, so usually that line or that candlestick touches that resistance point, resistance price point, because it's a price point. Usually when you see it hit at least about 3 times or more, then that usually shows where that highest point usually touches before it starts a decline. And the support, of course, is where the lowest point would be. Once it touches that point a few times, usually that's when you'll see a change and it will start to increase again.
Understood. And community, have any access? We are still here in the building. Have him. And do you, so I saw a question that asked, do you refer to yourself as an investor or a trader?
I'm an investor. Trading is more of a day to day thing, week
And I
to
believe you
week.
have licensing for that as well, right? To be a trader.
No, not
Don't you have
not exactly. You have to have a license if you trade actually at the New York Stock Exchange. Um,
gotcha.
but you can invest. You can be just like me, and you start investing, and you can decide that you want to trade your securities, your stocks on a day to day basis. But
Mhm.
you have to have the time. So you have to literally watch the market from 9:30 to 4 p.m. on a day to day basis. Watch those stocks go up and down, and know when to buy and when to sell. I'm still learning. this is still a learning process for me. So I stick to investing, long term investing, or even short term investing. As I learned the stock market, I learned to see where a lot of my portfolio, my stocks, they reach its highest point, and then okay, I might pull out and I might wait until it hits its lowest point again, and then I'll buy it again. So I just keep doing like that flip, like I watch it and just keep that continuous motion, and that's how I make a profit.
Got you. Well, from what I pick up on and what I hear is that to just give it a shot. Give it a shot. Maybe start with an amount that wouldn't hurt you and won't put a dent into your life, and see what happens, and kind of like continue to learn and to learn the process and to study the process, but to not be scared.
Yeah, when I learned, someone said start with $1,000. I watched a YouTube video, and this investor, he said just start out with $1,000 and make sure that's $1,000 that you're not worried about, and just invest, and you can invest in different things, you know, and because all companies are different. Hold on one second. Can you guys still see me?
Yeah, 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 yeah. You froze a little bit when you moved, but we can still see you. All right, guys. He's probably refreshing his browser. We in these technology streets, and things work a little different than they do in person. In the meantime, I'll share with you guys that next week's guest is Lindsay T.H. Jackson, and she'll be here providing the description, or she'll be here walking us through how to unlearn racism. I'm super excited about that. Anything that I can unlearn and get rid of any things that are in my way. I love that kind of topic. Hopefully, LS will be able to join us back in the studio. But I do know that his contact information is down on the bottom, so I will definitely implore you to jot that down so you can reach out to him and find out what else he knows about stocks, what else he has learned, and how us older folks can take a little page out of the younger folks' books and get those stories out of our way. Thank you for being here with us this week. We truly. Okay, perfect timing. Perfect timing. He's backstage.
I'm
Welcome back. Just
I'm sorry. I'm
oh,
sorry about that, people. Kind of a little technical difficulty there with the laptop.
it's all good. It's totally fine. I was filling in the space, but is there? I implored them to reach out to you via any of your contact methods that are on the bottom. Is there anything that you would like to say, or to kind of recap, or kind of brief for the folks before you depart for today?
Just with no risk, there's no reward. Just don't be scared. Get out there and try it out. But do your research. Anything I said today, that's information based on, my research, data that I've taken. You as an investor, you have to do your homework. Just do the research before you invest, because there are risks that come with investing. You It doesn't mean that you're going to lose a lot of money, but you might take a loss. But sometimes losses come for better gains, you know? So, if you don't put yourself out there, you'll never know, you know? And if there are other people, other races that's out there doing it and living, financial sustainable lives, or, living their best life, then why not? Why not? I know a lot of people that they day trade and they sit at home and they live a luxurious life. So why not get out there and try? And a lot of times, there are stocks that, you know, can really blow up. I mean, Amazon became one of the largest retail companies in the world. So anybody that invested in Amazon when they first became a publicly traded company, I'm pretty sure they're smiling right now.
Mhm. I'm pretty sure they are, and there's a couple more I can think of, and I'm like,
Right,
yeah.
exactly.
Um,
Apple,
I
you
definitely,
know.
for me, it's the Bitcoin. So I hear you.
Okay.
Hear you.
Okay.
When
Yeah, I know a lot of people who invested in Bitcoin when it was a couple dollars.
when you don't dive in, and I'm on the side of it of the not diving in. So I definitely and know a lot of people who did dive in. So I definitely, that's where I can relate to that that impact and that way of being and the impact that it has. But
Mhm.
yeah, I agree. I love that. I love that statement of with no risk, there's no reward. And I think that's a beautiful way to say it. Educate yourselves, rewatch this video over and over and over again, take notes down, research, research, and more research, and then put yourselves out there. Take the risk.
Yes. And I will be working on doing like one-on-one consulting. So people, please look out for that. You know, we'll sit down. I could teach you how to start from the basics to, learning how to read a chart, looking at financial statements and so on, getting into option trading and things of that nature. There's a lot of different ways you can make money in the stock market. You can even make money when the stock is falling.
Mm,
So,
interesting. Beautiful, beautiful. So you heard that, folks. You have the invitation. Please reach out. Reach out to LS. Talk to him about money. Find out what you don't know. Get rid of any stories that are in your way. And yeah, we look forward to seeing you again next week. And thank you.
thank you. Thank you.
Greetings, greetings, greetings. Good afternoon, Juneteenth family. Welcome to another weekly Lunch and Learn.
In terms of business, if you have a dream, go for it. Pursue it. Work hard at it, because with anything that you want to do, it's gonna come hard work. If you don't put the hard work, if you don't put the time into it, it's not gonna flourish the way you want to.
Maybe advice for anybody who's looking to start a business, like just do it. Start off small and then kind of expand. I know sometimes it can be overwhelming, but like once you're in it, you'll be like, oh my gosh, why didn't I do this long time ago?
Love you. Tell yourself, I love me too. I love you, Amina. Love you. When you open your heart and your mind, you're opening up to your blessing.
Yeah.